Hello, traders. This is Trader Geek Sam with your Sunday, February 15th, 2026 market review and preview video. Hope you're having a great long weekend, and we'll get started by reviewing a few of the numbers from the past few weeks, months, and quarter. We're starting with Friday's action, which was generally positive, but a disappointing close. We saw Bitcoin finally bouncing and giving us about a 5% gain. Gold was up almost 2.5%. The small caps up 1.32%. Mid caps up almost a percent. The Qs, after being up a lot more, just eked out about a 21 basis point gain. At the bottom of the list, VIX giving up only 1%, so holding on to that 20 level. A little fear about what might happen over the weekend. Kept traders from going home with positions. Mag 7 lost almost 1%, keeping up their losing ways, and the dollar was basically flat on a day where we received CPI news that was basically better than expected. Taking a look at the major markets for the week, the VIX clearly ahead of everything else, up 16%. TLT up 2.5%. Nice bounce in the long bonds and the intermediate term bonds, which means the yields were down. I think the 10-year was right around the 4.2%. Gold up 1.62%. Aggregate bonds 0.86%. At the bottom were the Mag 7s losing 3.11% as the AI trade loses a little bit more steam. Bitcoin losing 1.83% on the week, and microcaps down 1.67%. SPY lost about a 1.25%, as did the Qs and the Vanguard Total Market Index. So pretty much a red week, but helped a little bit by the meager bounce that we ended up with on Friday ahead of the long weekend. Looking at month to date, which is basically 2 months or 2 weeks old, 26% up for the VIX. Gold up 8%, despite the big sell-off we saw in late January. TLT 3.66%. That's a pretty healthy move for the bonds. Mid caps leading the way there, 2.84%, and aggregate bonds up 1.3%. At the bottom of the list, Bitcoin down 12%. Bitcoin bouncing off that critical 60,000 level on Friday, and really coming back a little bit. Let's see if we can get some follow through on that. Would be a good indication for risk assets. Magnificent 7 down 8%. Qs losing 4%. Tech heavy, and the micro caps uncharacteristically starting February down 2%, as was the SPY and Total Market Index. Taking a look at quarter to date, which is through the 13th, VIX is the clear winner, up almost 38%, with gold up almost 17%. Mid caps up 8%. IWM small caps 6.82%, and micro caps up 5%. At the bottom there you go. Bitcoin year to date down almost 22%, 21.5%. Mag 7 down 7.29%. Kind of what was first last year is now last, although Bitcoin did not exactly end the year on a positive note, and Q's down 2% year to date. If we take a look at the sectors on Friday, utilities continuing their winning ways, up 2.76%. Retailer stocks 1.63%, and real estate up 1.47%. At the bottom, financials still trying to find their bottom, losing a lot of altitude in the last couple of weeks, as were communication stocks. That's Google and Meta, the main components there, and the rest really not doing a whole lot on Friday, as again the rally lost steam when the afternoon came, and we ended up closer to the bottom than the top of the rally. Last week we had utilities up 7.25%. Real estate up 3.6%. Materials also continuing their winning ways up 3.5%, and energy 2.07. So if anybody tells you that nothing's rallying, well, you got to look at these and see that they are. At the bottom end, we've already talked about financials being weak. Metals and mining not keeping up with the metals, which are bouncing harder than the actual ETFs, although the GDX is doing okay. IYT transport's losing 3%, and retailer stocks down 2%. Taking a look at the month of February, XLU leading, energy second place, and then materials. So anything kind of hard is leading the way, with telecommunications up 6.23%, even though Cisco did not react well to earnings. Real estate up 6.2%, and XLP, one of the clear leaders in 2026, up 6%, and industrials up 4%. At the bottom, discretionary down there, XLF, financials losing 4%, as are communications and technology. Definitely a bifurcated market when it comes to the various sectors. If we look at the quarter, which is actually also year to date, since we're in the first quarter, best sector so far by far is energy, which didn't do much last year. Materials, consumer staples, metals and mining, telecommunications, and industrials, all up double-digit percentages. And fortunately, none of these are down double digits, but financials giving up some of the gains from 2025. Technology down 3%. Discretionary down 2.7%, as were communications. So right there, healthcare up a mere 2%. If we take a look at the industries on a weekly basis, we can see here that, let me make this a little bit smaller so we can see the key. For the week, GDX, miners up 6.73%, ITB, basically the home builders showing a lot of strength of late, and robo, basically automation stocks 3.9%. I think even NVIDIA is in that one. At the bottom, big surprise, we've got cannabis stocks down 4.8%, and KWeb down 4.43%. That's the Chinese internet stocks. The American internet stocks, FDN, down 3.63. Software just can't get off the mat. Looks like they were going to bounce, and they just need a little bit of a basing period. They're in the bottoming process, but not quite there. XBI, biotech's losing about 2%. Looking at the quarterly performance and the year-to-date performance in the industries, GDX up 21%. These are the gold miners, precious metal miners, gold and silver. ITB, this is the home builders, up 18%, as are the solar stocks, up 18%. XOP, exploration and production, goes hand in hand with energy, up 17%. And the semiconductors up 13%, as are again the robotics and automation stocks, the robo ETF. ITA, transport, defense stocks, not the defensive ones, the ones that build the war gear, 9.4%. And there you can see software down 19%, and that's even after a little bit of a bounce. And cannabis stocks, again, once the talk goes away about legalizing across the country, cannabis stocks get hit. And so nobody's talking about it anymore, and they just lose altitude. FDN, internet stocks down 12, cyber stocks down 6.5%, and blockchain stocks down 5%. So mixed bag here as far as industries go. If we want to take a look at the Mag 7, you'll see that for the week, all of them are in the red except Microsoft and Tesla. And even those, a meager gain of 4 basis points on Microsoft, and Tesla was up 1.5%. But Apple, in one of a rare forms of rally, then just 2 or 3 days of getting hit, down 8%. Amazon losing 6, 7 days in a row, down 5.48% after earnings. Google also post earnings reaction, losing 5%, and Meta, after a nice response to earnings, losing 3.28% on the week. If we take a look at the Magnificent Seven on a quarterly basis, you can see, which is exactly year to date, Microsoft is the worst of them. Amazon is next in line, down almost 14%. Tesla down 7.18%. Apple down 6%. Meta down 3%. None of the Magnificent Seven are positive on the year, and we haven't seen that for a while. So, based on the charts I'm looking at, there could be a little bit more downside for these stocks. So far, 2026, not the year of Mag 7, and NVIDIA is the best performer among them. And that's not saying much because it's down 2% on the year. So that's kind of a brief look at the sectors and industries over the last month and up to year to date. Let's take a look at the charts and see what's going on and what we can glean for the coming weeks. We're looking at my typical tripane of charts. We've got the daily chart here, weekly chart, monthly chart for those of you new to the video, and I welcome you. You can see here, got a lot of lines here. Let's see if this makes it any better. If I maximize this cell, just kind of take a look at the daily. You see I have some drawings on here indicating reference points. This blue line here is the 50-day, and you can see that we had pretty much a doji right in the middle there on Friday, closing just below the 50-day. My green line is the 21 EMA. You see I have the typical Bollinger Bands lit up just right there. And this is an 8 EMA, this blue line. We also see that we are below a chandelier, the bearish chandelier stop. We're below the PSAR, and MACD is definitely negative. And we have RSI that's just below the neutral level. And let me flip this back here. You can see here that I have a line here of in the sand at 69.32. Above that, we could be more bullish, but below that, we stay a little bit bearish. And, the 50-day line is indicating kind of the same thing. Our options implied expected move is up here. And for the week, SPX has a 144-point move, plus or minus. And when you consider some of these days, here's basically Monday, Tuesday, Wednesday, Thursday, Friday. A day like Tuesday or Thursday, we had about a 120-point move in just one day. And here we're predicting 144 points for the entire week. So we went up after the prior Friday's nice day. We continued follow through on Monday and just fell apart for the rest of the week and couldn't hold more than half the gains on Friday. Taking a look at the weekly, still have a bullish chandelier, bullish PSAR. We basically have an inside candle on the weekly, although the top line penetrated above the prior week's top line by about 40 basis points, about 0.4 points. So not to mention, so I would consider this an inside week. Not a good looking candle, but here we are. We're going to bounce off the 21 EMA. We have a sell signal on the MACD, so it's sideways to down, though way above the zero line. And by the way, I didn't mention that we are threatening to cross the zero line on the daily chart of the S&P. So we made a margin new high, but you can see here, you can draw a box, whether it's 100 points or 200 points. And I think we'll get some energy once we cross above or below one of those particular lines. Everything still looks bullish here, but it just looks kind of weak and feels kind of weak. There's the 8-week moving average, even on the weekly basis, not as good as it looked up here. And we need to get in gear quickly to kind of ensure that this market doesn't start falling apart like it did in early 2025. Monthly chart, we're only halfway through the month. And so not much to glean so far from this partially formed candle. Looking really good. Looks like we're consolidating at the top. And the MACD looks like it wants to flip over, but we have half a month left. And we can see further weakness in the RSI. Still in the overbought at the 72 level, but under 70. Then we get to a little less bullish conditions. So we like to see weeks and weeks and months of a red hot RSI, and now we're coming in for a bit of a rest. So undeniably bullish. I don't want to say bearish, but neutral to bearish here on the daily chart. So if I had to make a call here, this is advantage bulls on the SPX. Looking at the NDX, the Nasdaq stocks, again, after Friday's nice little rally on the 6th of February, a bit of follow through on Monday. It looked like tech stocks were going to carry the lead. Had a marginal new high on Tuesday. Wednesday looked like they tried to sell it. They couldn't. But Thursday they got through, and here we are, another doji on the daily of the Nasdaq. MACD is definitely negative and below the zero line, and we're not really oversold on the daily. We're at a 40 level when you consider the RSI. If we take a look at the monthly chart or weekly chart, doesn't look as good as the SPX, but you can draw a box around this whole thing here, and you would see that we've basically gone nowhere since October. We've been up, we've been down. We haven't made a new all-time high since October in the NDX, and we do see that we are on the cusp of triggering a downside bearish PSAR if we get below this little dot here, about 444. MACD is negative, and we have a neutral RSI on the weekly chart. Bullish chandelier, bullish PSAR. So those are our positives. And you can see here the options implied expected move for the week on the NDX. That's about 667 points, give or take, on the week. Again, look at these candles here. Basically 400-point range on Thursday. Friday, call that 150-point move. So really volatility is there, and we will continue to see that, in my opinion. Taking a look at the monthly chart, we did stop one time framing here as we took out the low of last month, January. So the low in January is 24,954, and we closed last week at 24,732. So we have stopped one time framing. One time framing just means that we undercut the low of the prior month, or on a downside basis, or we undercut the prior month high as we're going up. We undercut so we were one time framing where no candle undercut the prior month's candle, but here we have done this, and obviously there's 2 weeks left in February, So this could all change, but at least on an interim basis, we have violated one time framing here. Um, Chandelier and PSAR stops, and those are um, volatility type stops, still positive. MACD looks like it wants to flip over, and we have undercut the 70 level on the RSI, barely at the 68 level. So here, advantage bulls, I would say here. And for this one, I would say neutral to bearish and not as good looking as the SPY. But I mean, all you have to do is look here and see that since September, October, we're still in the same spot, depending which part of September you consider. We've gone nowhere for 5 months. So this could be a big, long consolidation. And we are correcting through time, we're correcting through rotation rather than a big drop. I don't think that's the case, but we shall see. I think we're going to have something to scare the children over the next couple of weeks, especially since seasonality is not in our favor at this time. Switching to the Russell 2000, the small caps. Um, After a nice run over here, and I've said this the last 2 weeks, we went down and we went up and we came back down. And even though the Russell 2000 looked like it was going to take charge, and even though the interest rates have been coming in, yields have been coming down, it's not helping the small caps that much, although Friday's candle looks better than the NDX and the SPX. MACD is definitely negative, and we have middling RSI at the 50 level. When we look at the options implied expected move for the week, it's a 72-point move. And by the way, for last week on all the indices, we ended up inside the expected move, but tended towards the lower edge of the expected move. So although we did pierce below it intra-week, we closed above it by the end of the week. So we didn't have any incidents of closing outside of the Bollinger Bands last week. Taking a look at the weekly, you can see sideways consolidation, green, green, red, green, red. So chop, the name of the game, and kind of a wide range candle. I call it the candy wrapper candle. And looking at the MACD, it looks like it wants to flip over on the weekly, and we have a 63 RSI on the weekly. So closer to overbought than neutral. That's a good sign on the weekly. Bullish chandelier, bullish PSAR. Same with the monthly. You can see here that, let me make sure I've got my charts properly shown. There we go. That's better. We had a topping tail last month, and we're getting another topping tail on the Russell 2000. This looks really good. MACD is solidly positive, no signs of rolling over on the monthly. And we have a 67 RSI. We can't quite get to the overbought level on the monthly level. And the Russell can drag up the other indices, but can the other indices drag up the Russell? From what we've seen over the last year, year and a half, that's not been the case. So if the Russell's going to do it, it better do it on its own, because the other guys are not going to necessarily drag it up with them. So bullish here, neutral to bearish here with the MACD sell signal in place. So I would say advantage to the bulls here. It's their ball to lose. Same for the NDX and SPX. So I think if I had to decide where we are, I mean, this is the bulls get the benefit of the doubt still. There's a lot of reasons why. Whatever weakness we've been seeing has not been terrible, not yet. And therefore, we could consider this consolidation and rotation inside a bull market. Taking a look at what the VIX did last week, we did close at 20.6, which I mentioned, our first close over 20, weekly close over 20 in a while. Last week, we closed at 1776. So the last time we closed over 20, we have to go back to September 17th. I think this is a September, yeah, September 17th. This is the first time we closed over the 20 level. So we came down, we're rotating up. That's the weekly. Here's the daily. And you can see how volatile things have been. It hits a high of 23.1. It runs down all the way down to 17.8. And here we are back above 22 on Friday. I'm sorry, we traversed up there. We closed at around 20.4. So finally seeing the volatility index show that indeed there is some volatility. And what I've been showing for weeks in terms of the construction of the VIX contracts is confirming that extra volatility as we see in the later term VIX contracts or VIX futures contracts. VVIX, the volatility, a measure of VIX call buying, says definitely they're buying protection. And the fact that we're at 115, which is above the kind of 110 level of demarcation, which I consider to be pretty bearish. So we're at 115. Anything under 100, then that tells me we have smoother sailing and less volatility. So the VVIX is kind of proving out that volatility is here, and it's probably going to stay for a bit until we can get this VVIX under 100 for some period of time. So VVIX confirming the weakness in the markets. Speaking of the VIX, we have a VIX expiration coming up in 2 days. So these VIX spot VIX options expire at the close on Tuesday, and the settlement is on Wednesday morning. And this coincides with a VIX futures contract expiration. And what we like to do each week is take a look at where we're at. We're at 20.6. Let's call it 20.5, round it off. And if we go $1 out of the money, let's not use this week's. Let's use the next monthly expiration. We'll go out to 18 March. So call it 21 and a half. If we wanted to buy those, we were bearish on the market, we go $1 out of the money. We paid $2.41 for the calls. That would make us bearish on the market. If we were bullish on the market, we probably want to buy calls on the VIX. And for those, we're going to pay about $1.71. So the bulls or the bears definitely have the advantage here as far as cost, maybe 1.5 times, although that's not really a big multiple. When it's really to the bears' advantage, then we'd see 6, 7, 8, 9, 10, 11, 12 times the cost on the puts versus the calls. So here we basically have about 1.5 times. So edge to the bears on here, but not much of an edge. Just for kicks, we'll look at the 21 and a halves expiring next week. A little bit wide there, 98 cents for the 21 and a halves, and 40 cents for the 19 and a half. So that's about a double for our VIX calls and puts that expire. Actually, it's only 1 day since Monday is a holiday. So we have just 1 day till these expire. Taking a look at the, wanted to do the VIX futures, take a look at whether we're showing risk, but with the VX or the VIX at the 20 level, you can see that going out in time, there's higher values for these VIX contracts, which means that we have the normal contango in VIX futures For the most part, the only one we see here is the March contract being slightly less than the contract that expires this week in 3 days. And that's what usually happens. You get the VIX, spot VIX options that expire on Tuesday night and they go off the board on Wednesday morning. And then that same time at the open, you have the expiration of this VIX futures contract. So for the most part, we are in our normal contango with more volatility the farther you go out. But these are as compressed as can be in terms of the difference between them as we go out and further out in time. So, and that's a bit of a feather in the bears camp with that indication. But again, these are one data point here, one data point here. Soon you have enough evidence to support a bearish thesis. And in my opinion, we're going to get more consolidation. We're going to get more weakness, but I'm not seeing the makings of a true crash or collapse or a terrible anything beyond a normal run-of-the-mill correction, which I think we're overdue for and would be good and healthy for the market. This is an options expiration week. The February options roll off the board on Friday. We have some AM expiration, which stop trading on Wednesday night. And then we have our normal weekly expiration. As I mentioned, 144 points is our expected move, plus or minus. And keeping in mind that although we've stayed inside the expected move over the past few weeks and maybe exceeded it a little bit, we're getting moves of the magnitude of our expected moves in the same day, let alone the whole week. So take this for a grain of salt. I mean, last week's expected move was about 120 points, and we used up every ounce of them. And in fact, coming into Friday, of the 120 points, we had 58 points of those remaining on Friday. So half of the whole week's points coming in. And notice that we have only a 4-day trading week this week, and yet we're at 144. And last week we had 5 trading days, 420. So if you do the average, that's basically 24 points a day last week. And this week, 144 divided by 4, 36 points on average per day this week. So buckle your seatbelts. We have a lot going on this week. And barring any news from over the weekend, and so far, so good. What I like to look at and keep an eye on during the weekend is what the Bitcoin futures are doing. And at the moment, they're down about 2%. We closed Friday right around 68,812, and we're at 68,319. So not much going on here to indicate one way or another, kind of leading me to believe that we'll probably get a somewhat neutral open on the futures tonight. And keeping in mind that tomorrow is a market holiday, so they're shortened futures hours, but they do open. So, and I imagine that it will be very thinly traded given the 3-day weekend and our buddies across the pond and across Asia will probably be predominantly doing their thing with not much liquidity coming from the US. One of the things I wanted to kind of show with this is, for all the bears out there, here's something to remind you that, as Kramer says, there's always a bull market somewhere. And here's a bull market in stocks with a lot of different tickers up. This ticker, which I had never heard of, Eresca up 223%, SanDisk up 156%. You can pause the video and see all of these, but you definitely have some superstars in this list. Micron, after a booming year, up 40%. TeraWulf up 39%. Light Momentum. What a year this is having after us. Another great year. Corning up 50% year to date. Unbelievable stuff here. And Bloom Energy up 54%. Western Dig, another 58%. So Fastly had an incredible week last week, up 77%. This thing was a single-digit stock, and now it's up to $18.26. So incredible stocks. And I remind you that which reminds you that there's always a bull market somewhere if you know where to look. Uh, Looking at what we've got coming up for this week in terms of major economic reports, it's a busy week. Monday is obviously a holiday. It is an options expiration week, but things kick off on Tuesday with Empire State Manufacturer and home builder confidence index. It'll be interesting to see what comes out of the home builders and the other housing stats after we got a same comparable sales on existing homes that was a really way below expectations. So we got housing starts for November, not great. It's kind of stale data. Building permits, housing starts, durable goods, industrial production, and capacity utilization. And Wednesday gets us the meetings of the Fed's January FOMC meeting. Thursday, initial jobless claims, trade deficits, Philadelphia Fed. And on Friday, we get GDP for the fourth quarter. I'm not sure if this is the first reading. We get personal income and spending, PCE index, core PCE, the Fed's preferred inflation measure. I don't think this is going to have any impact on when they raise or when they lower rates. But it definitely will stir volatility up. And we have a few more reports coming up on Friday at 9:45 and 10 a.m. new home sales. Again, want to be watching that housing data closely because it does have an effect on the economy and therefore on the markets. Taking a look at the earnings whispers, you can see here earnings season is now on the downswing. Tuesday before the opening, I have Medtronic, we have Fluor, and in the afternoon, Devon Energy, Palo Alto Networks, Hecla Mining, and Toll Brothers, along with Kenvue. Wednesday, we have Analog Devices. We have Verisk, and in the afternoon, some old school stocks, Equinox Gold, eBay, Figma is a newer one, DoorDash, and Pan American Silver. Thursday, we get the first of several retailer stocks. One that's been on a tear, along with consumer staples, is Walmart. That's coming up on Thursday before the open. Wayfair, another retailer, online retailer, Visteon, Lemonade, Insurance, John Deere, and Industrials. After the close on Thursday, we get Open Door, Transocean, which has also been on a tear, Newmont Mining, Akamai, and Sprouts Farmers Market. Friday, not much to speak of that we know of. Lamar signs, you see those all over the place. So a busy week for earnings, but winding down this first quarter or fourth quarter earnings season, which has come in once again above expectations, earnings and revenue wise. But that's what happens when you lower expectations across the board every quarter. It's easy to beat, but as we have seen here, unless you beat and you beat really, really well and raised guidance, the stocks have just been getting hit left and right. There has not been a whole lot of stocks that are reacting. And if they do, sometimes they go up for one day or 1 or 2 days after earnings, and then they get hit. Just use Meta as exhibit A for that behavior. In any case, the gist of today's video is we've got a lot of cross currents. We've got a lot of news coming. The charts tell you that on balance, the bulls are in charge. We're doing consolidation. The rotation is keeping this thing alive. And if it doesn't continue, then I'm afraid we're heading down to the mid to low 6,700s to kind of take out a little bit of the froth. But again, this is the bulls market uh, to lose, and the bears could grab the reins, and we'll see if what we see here on the daily chart, which is starting to propagate to the weekly chart as we're starting to roll over, and then ends up taking us down and below. Call this the 67.89 level, where we take out the January low, where we made a new all-time high. So be careful out there. Appreciate you watching. Tell your friends about it, and we will see you for next week's video. Enjoy the rest of the extended weekend, and take care. Bye-bye.